Picture this. The world's wealthiest investors, the titans of finance, the individuals who shape global markets with their decisions. They are quietly shifting their fortunes, strategically reallocating vast sums of capital, but surprisingly not into the usual suspects like stocks, nor are they piling into traditional safe havens such as real estate. Instead, they are discreetly yet decisively moving into a digital asset, Bitcoin. These sophisticated investors see Bitcoin not as a fleeting, risky gamble or a speculative bubble. They view it as the next logical evolution of value, a groundbreaking innovation in how we perceive and store wealth. They believe it's poised to surpass gold's, its 5,000-year reign as the ultimate store of value, a reign built on scarcity, beauty, and historical significance. While mainstream headlines obsess over the daily price swings and short-term volatility, these financial titans are quietly betting. They are betting on the power of absolute scarcity, in a world drowning in printed money where central banks are constantly devaluing currencies. Gold has undoubtedly survived empires and weathered countless economic crises. But the digital age demands a new kind of store of value, one that is fit for the modern world, one that's borderless, accessible to anyone, anywhere in the world, unconfiscatable, resistant to censorship and government control, and engineered from the ground up for the internet era, leveraging the power of decentralized networks. Billionaires aren't just tentatively dipping their toes in the water by buying Bitcoin. They're strategically moving significant portions of their wealth out of old-world assets and decisively allocating it into this exciting digital frontier. The underlying logic is remarkably simple. In a world where the supply of money is effectively infinite, constantly expanding through quantitative easing and other monetary policies, the scarcest asset ultimately wins, holding its value and appreciating over time. This isn't just fleeting hype or speculative mania. It's a carefully calculated move, a strategic allocation of capital by those who possess the foresight to see the future of finance before the rest of us fully grasp the implications. The battle for the future of money, the struggle to define the next era of value, is already actively underway, and the smart money, the institutional investors and forward-thinking individuals, has already quietly chosen its champion, placing its bets on the future of digital scarcity. So forget what you think you know about traditional finance. The world is changing at an unprecedented pace, and those who adapt to this new reality will be the ones who thrive in the years to come. Let's dive into the evidence, examine the data, and see why Bitcoin may very soon dethrone gold as the world's premier store of value. While Wall Street sleeps soundly, dreaming of quarterly earnings and market reports, Bitcoin never stops its relentless march forward. It's a market that knows no downtime, no closing bell, no coffee breaks. Even on holidays, those days of rest and reflection for most of the financial world when traditional markets are closed, locked up tight and gathering dust, Bitcoin trades around the clock, a truly global phenomenon accessible to anyone with an internet connection, empowering individuals anywhere on this planet, anytime, day or night. This non-stop market, this constant hum of activity, makes Bitcoin arguably the most liquid and responsive asset in history, a digital barometer of global sentiment, reacting instantly with lightning speed to global events, political shifts and economic tremors. In times of crisis, when fear grips the markets, investors once turned to gold, the age-old safe haven. Now, a new generation, tech-savvy and digitally native, and the world's savviest investors, the titans of finance, are increasingly choosing Bitcoin, recognizing its potential as their safe haven, a hedge against uncertainty. The market's always on, a constant flow of information and opportunity. So opportunities for profit and risks, of course, can appear at any hour, in any corner of the globe, from Tokyo's bustling markets to New York's towering financial district. Old investing rules don't apply here. The old guard is struggling to keep up. Bitcoin is a living, breathing, ever-evolving financial organism, a complex ecosystem of buyers and sellers. Recently, the Federal Reserve, the central bank of the United States, signaled possible interest rate cuts, a potential shift in monetary policy, a move that could weaken the dollar, diminishing its purchasing power, and drive even more capital, a tidal wave of investment, into scarce assets like Bitcoin with its limited supply of 21 million coins. Lower rates, easier money mean more fuel, more energy for Bitcoin's next rally, its next surge to new heights. As geopolitical tensions rise, as the world becomes increasingly uncertain, the stage is set, the pieces are in place for a massive shift, a fundamental change in where investors seek safety, where they park their wealth. Bitcoin's 24/7 market, its always-on nature, is a game-changer, a true innovation, one that traditional finance simply can't match, can't replicate. The smart money, the institutional investors, is already adapting, evolving their strategies. Are you ready to adapt? Let's see where the price could go next, what the future holds for Bitcoin. i.e., where is Bitcoin headed next? In a market this volatile, predictions are tough, but data gives us clues. AI models suggest a 40% chance Bitcoin climbs to $107,000, $113,000 by month's end, breaking out of its current range. There's also a 30% chance of choppy action, with dips toward the $100,000 mark before stabilizing. This volatility shakes out weak hands, while institutions quietly accumulate more. Most likely, Bitcoin will consolidate between $104,000 and $112,000, building a base for its next explosive move. Despite high prices, retail investors remain bearish. Ironically, a classic sign that a major rally could be near. History shows when the public gives up, the smart money steps in. The wealthy invest with logic and patience, not emotion. They're not trading for next week, they're positioning for the next decade. That's how fortunes are made in this new era. Robert Kiyosaki, famed author of Rich Dad, Poor Dad, built his empire by accumulating real assets, not chasing dollars. Now he's turned to Bitcoin, seeing it as the digital successor to gold, finite outside government control and built for the 21st century. The wealthy focus on stacking Bitcoin, not obsessing over its daily price. Their strategy, consistent accumulation, regardless of market swings. Kiyosaki's pivot signals a new era. Bitcoin is the asset to own for the future. Ricardo Salinas Pliego, a prominent figure in the Mexican business world, stands as a testament to entrepreneurial success and visionary thinking. As one of Mexico's top billionaires, his insights into the financial landscape carry significant weight, especially when he speaks about the future of digital assets. Salinas Pliego isn't just observing the cryptocurrency space, he's actively making bold predictions. He foresees that Bitcoin will not just rival gold, the traditional safe haven asset, but it will surpass it, ultimately becoming the dominant store of value in the global economy. This is a strong statement, considering gold's long-standing history. For Bitcoin to match gold's current status, its massive $16 trillion market cap, a figure representing centuries of accumulated value, its price would need to soar eightfold from its current levels, potentially rocketing to over $800,000 per coin. A price target that seems almost unbelievable today. Salinas argues Bitcoin is inherently superior because it is easier to divide into smaller units, making it more accessible to a wider range of investors. It's also easier to transport across borders, and far more secure than physical gold, which is vulnerable to theft and requires expensive storage. Furthermore, Bitcoin is virtually impossible to seize by governments or other entities, offering a level of financial sovereignty that gold simply cannot match. As the world increasingly wakes up to these inherent advantages of Bitcoin, he confidently expects trillions of dollars to flow directly from gold and other traditional assets into Bitcoin, fueling its meteoric rise. Salinas isn't approaching Bitcoin as a short-term trader looking for quick profits. Instead, he's an accumulator, strategically building his position over time. He actively embraces volatility, buying more on every dip and resolutely ignoring short-term market noise and fleeting price swings. If he's proven right in his assessment, it would suggest that we're still incredibly early in Bitcoin's overall adoption curve, with the vast majority of its growth still ahead. An 8x move would create trillions in new wealth for those who hold Bitcoin, and inevitably force institutions worldwide, from pension funds to sovereign wealth funds, to finally add Bitcoin to their balance sheets, recognizing its growing importance. It would firmly cement Bitcoin as the planet's premier store of value, surpassing gold and all other contenders. The financial revolution is just beginning, and Bitcoin is at the forefront. Will you be part of it, or will you watch from the sidelines? Michael Saylor, CEO of MicroStrategy, has turned his company into a Bitcoin powerhouse, buying relentlessly. He sees Bitcoin not just as a corporate asset, but as a matter of national security for the United States. Saylor urges the US to build massive Bitcoin reserves, arguing that the nation controlling the dominant digital asset will shape the future. In a world of rising global competition, Bitcoin offers a neutral, incorruptible reserve currency. MicroStrategy's relentless accumulation sends a clear message. The smartest leaders are moving to a Bitcoin standard. The game has changed. Will America lead or be left behind? Bitcoin's value boils down to one thing: absolute scarcity. More old Bitcoin is being locked away each day than new Bitcoin is mined, shrinking the available supply. Early adopters and billionaires are holding tight, treating Bitcoin as a multi-generational store of wealth. Unlike gold, Bitcoin's supply is fixed. Only 21 million will ever exist. Every coin bought and held is one less available for others. Institutions and corporations are racing to secure their share before the supply dries up. This relentless accumulation is driving a supply shock. When demand finally overwhelms what's left, the price could explode. The window to accumulate is closing fast. The charts are sending powerful signals. Bitcoin is holding its 50-day moving average, a classic sign of a strong uptrend. A bullish, inverse head and shoulders pattern is forming, often a precursor to major breakouts. Bitcoin dominance is rising as capital flows from risky altcoins into the safety of Bitcoin. Institutions are consolidating their positions while retail chases distractions. The market is coiling, quietly building strength for a big move. Headlines may say stagnation, but the charts whisper explosion. The next rally could catch everyone off guard. Are you ready? We've heard from billionaires, authors, and corporate leaders betting on a digital future. The math of Bitcoin's scarcity and the bullish technicals are undeniable. Gold is analog, heavy, and hard to verify. Bitcoin is digital, borderless, and sovereign. As trillions in wealth pass to a younger, digital generation, Bitcoin's rise seems inevitable, yet gold's legacy runs deep. Can Bitcoin truly dethrone a king that's lasted millennia? The debate is fierce, but the momentum is clear. What do you believe? Will Bitcoin surpass gold's market cap in our lifetime? Share your thoughts in the comments. Like, share, and subscribe for more. The future is happening now. Don't get left behind.